Euro to Canadian dollar price stalemate, bulls versus bears at the 100-day SMA. The euro, is locked in a tug-of-war with the Canadian dollar, CAD, as the euro to Canadian dollar price grapples with resistance at its 100-day moving average, SMA. Despite a 2-day uptick, the pair couldn't breach this key level, retreating from a 7-day high. Technical indicators offer conflicting signals. The Relative Strength Index, RSI, hints at recovering buying pressure, while the Moving Average Convergence Divergence, MACD, suggests waning selling momentum. A break above the 100-day SMA could signal a trend reversal for the euro to Canadian dollar. Meanwhile, the CAD faces headwinds from potential U.S. trade measures. The U.S. hinted at raising tariffs on Canada and Mexico, weakening the CAD across the board. This has bolstered the euro to Canadian dollar in the short term, but the euro itself remains pressured by concerns about a potential trade spat with the U.S. The European Central Bank, ECB, is prioritizing economic growth over inflation control, highlighting the Eurozone's vulnerability in a trade war scenario. The euro to US dollar currency pair has exhibited a mixed performance recently, influenced by various factors. The US dollar's strength, particularly following President-elect Trump's tariff threats, has exerted downward pressure on the pair. However, recent Federal Reserve comments suggesting a more gradual approach to rate cuts have tempered the USD's gains. Concurrently, growing concerns about the Eurozone economy, including potential economic weakness in Germany and political instability, have weighed on the euro. Overall market sentiment, shaped by global economic and political developments, has also played a role in the pair's movement. Additionally, the monetary policies of the Federal Reserve and the European Central Bank continue to influence the pair's direction. In the short term, the euro to US dollar pair has shown signs of a potential rebound, with the 1.0500 level acting as a key support level. However, the longer-term trend remains bearish, with several technical indicators suggesting a potential decline. Expert opinions vary, with some suggesting a limited upside potential due to widening yield spreads, while others indicate a possible short-term rebound based on technical analysis. Overall, the pair remains vulnerable to downside risks due to a strong US dollar and Eurozone economic concerns. Investors should closely monitor developments in both economies and central bank policies to gauge the future direction of the euro to US dollar pair. The euro to Japanese yen currency pair is currently in a short-term downtrend, with the next target to the downside being the September 30th swing low at 158.11. A break below the November 22nd low of 159.90 would confirm this downtrend. While a pullback to the 161.60s offers a potential entry point with less risk and more reward, the overall trend remains bearish. The pair's recent decline is largely due to heightened global risk aversion triggered by renewed tariff threats, which has bolstered the safe haven Japanese yen. Concerns about potential economic weakness in the Eurozone, coupled with market expectations of monetary easing by the European Central Bank, are also exerting downward pressure on the euro. On the other hand, the Japanese yen's strength may be tempered by uncertainty surrounding the Bank of Japan's future rate hike plans. While Governor Ueda has hinted at a potential December rate hike, upcoming inflation data will be crucial in determining the central bank's next move. In conclusion, the euro to Japanese yen pair faces downside risks due to a combination of global risk aversion, Eurozone economic concerns, and potential monetary easing by the ECB. However, a short-term rebound is possible, especially if the pair pulls back to the 161.60 support level. Investors should closely monitor global economic developments, central bank policies, and market sentiment to gauge the future direction of the euro to Japanese yen pair. The euro to pound sterling currency pair is currently trading within a multi-week range, and there's a possibility of an upward move towards the range's ceiling around 0.8450. The pair's recent false breaks and the positive crossover of the MACD momentum indicator suggest a potential bullish bias in the short term. However, the euro's weakness due to concerns about the Eurozone's economic outlook and the potential for a slower pace of policy easing by the Bank of England could limit the pair's upside potential. The recent decline in UK retail sales and the contraction in economic activity as indicated by the PMI data also pose challenges for the pound. Ultimately, the direction of the euro to pound sterling pair will depend on the interplay of these factors. Investors should closely monitor developments in both the Eurozone and the UK economies, as well as central bank policies, to gauge the future direction of the pair.